Sean, what are you making of all this? I mean, it's a lot to be grappling with, and as somebody who's investing money, it must be a real conundrum.
Yeah, look, it's a very, very difficult time, obviously, for markets. In the last couple of weeks, we've had some very bad inflation, data. Firstly, the wage growth. It's coming down, but it's not coming down as quickly. The labour market, I mean, it's come down from 600,000 to 400,000. It needs to be roughly around 100,000. And also the wage growth is, at 5.5%, which is inconsistent with 2% inflation. Add on that the CPI data from the weekend, and the Fed has to act quickly. We're still expecting 50 this time, 50 next month, and then let's see what happens in September. I think the main difference in the markets and why we've got risk off, the market's now not believing the story that inflation is temporary, and and that is the real risk off. We've been warning that bonds are dangerous for a while, that you have to have more alternatives, you have to have more infrastructure, but we still like equities in the medium term, but in the short term, everything's going to come under pressure.
That's what it seems like at the moment. So you got to ask. I mean, the BOT governor just saying that you can't be complacent as things change. Well, obviously, that's fundamentally the point here. So, how does it impact ASEAN, let's say, or emerging markets in this part of the world? Because they, in some senses, and depending on the jurisdiction, have to essentially play catch up or try and actually emulate others, even though they may not be quite as affected.
Well, I think the two positive things about this region is that you've got Japan and China going the other way almost. Yeah, they're going to have to stimulate more to get things going. Now, that's going to put pressure on the currency in the shorter term. And the second good point is, inflation's not as high in this region, even in Thailand, even in Korea, than it is in the rest of the world. You're talking 2% inflation rather than 8% inflation. And the third thing is, the ASEAN region, the Asian region, hasn't had as much stimulus as the rest of the world in terms of the consumer. So this is the problem. You've got to have a growth problem in Europe as well, not just an inflation problem, because all the furloughing, all the extra help isn't going to be there. So the consumer is going to be weaker, and that's going to be affecting in bank lending as well. Where in the region, it's the opposite. The region wasn't helped out. It's slowly coming out of COVID. Things are getting slightly better. It has inflation. It's a little bit behind the curve, but the growth profile in the second half of the year is going to be better than the last two halves.
Sean, Asian dollar credit looking better than U.S. peers, given that the Fed is likely to tighten even more now?
Well, I think you've got to be selective in Asian credit, but I think Asian credit sold off a lot more than was expected due to the Chinese high yield issues, the property issues, and is looking cheap. The duration is shorter, and at the moment we want to be underweight duration, and we are seeing some good inflation hedges in Asian credit, in India, in renewables, in commodities, in Australia, some good opportunities in Japan as well, outside of sovereign. So yeah, we actually think on a relative play, Asian credit is holding up better. And as we always say, it has this local bid. It's not subject to huge amounts of money coming out. Now, some other emerging market countries we wouldn't be as positive on outside of Asia, because countries like Turkey will certainly suffer higher oil price, higher inflation, higher rates, etc. So one has to be selective. But within emerging markets, Asian credit is a ray of light.
How about in terms of the equity markets? You talked about still liking equities. Are you liking Chinese equities? Have they bottomed? When do you start buying into Chinese equities?
Well, we've been negative for a while on Chinese equities, and we neutralised that a couple of months ago. We now think that Chinese equities will in the second half outperform, but it's going to be slow. We do think that the bottom has been reached in Chinese equities, particularly in the internet and e-commerce stocks, partly because the Chinese government have changed their policy on regulation and there's better cost control. But we're going to be in and out of lockdown in our view. It's not going to be simple. It's going to be 2 steps forward in China, 1 step back. Better growth in the second half of the year, but not a V-shaped recovery. So you have to be patient. But on a relative basis, they're quite cheap now. If you can get through one more quarter of earnings, we think they'll start to outperform at the end of the year.
Sean, very quickly, Japan. exporters make hay with the yen where it is. Are you confident in their ability to continue to do so, and would you be invested in them?
Yeah, I mean, we're still overweight exporters in Japan. We're underweight the domestic side of the story. We're not going to switch that yet. I would even actually think of switching exporters into China at some stage, because I think everyone's very underweight China. So in the next few months, I think you'll be seeing people taking money out of Japan and also India, which is looking a bit expensive, and putting it into China.